What is going on with Grab Holdings? It's been a while since I did an update video on the company, so here it is because we do have some news we need to discuss. In the last 6 months, this stock did perform quite well, up 40%. Now, in the last couple of days, especially in the last 3 days, this stock has gone up in one day 11-12%, and then at the time of making this video, the stock is down 10.6%, back under $5, now at $4.57, has a market cap of $18.39 billion. Now you might say, oh, look at the forward PE, super expensive, 148.2 times. Yes, that's true, but this company is just turning a profit. Plus, if we look at the expected number for fiscal 2026, you are trading closer to 41 times that PE. If you look at price earnings to growth based on that year's EPS, you're at a PEG ratio of 0.33, which is not expensive at all. So yeah, just looking at a forward PE and making a conclusion, in my opinion, is really not the right way to invest, especially not in these types of companies. Of course, if you look at the likes of, call it Apple, Coca-Cola, stuff like that, okay, I could understand. But a company like Grab, looking at the PE right now, just doesn't make any sense. At the time of making this video, the average analyst price target sits 22% higher than the price we're at today at $5.58. So let's talk a little bit about the company, the recent news, and why investing in a company that is in Southeast Asia could make a lot of sense. I'll show you a couple of numbers, GDP-wise, growth rates, population, and all of that throughout the video. So if you're interested in that, stick around, hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/gotchainvestor. Thank you very much. All right, so first a quick overview of the company and the expected growth rates. We've seen what's expected with regards to revenue growth, but what about free cash flow? Well, first of all, free cash flow is already positive. It's expected to basically explode year over year in fiscal 2024, then grow another 24.8% in fiscal 25, then 10.8% in fiscal 2026. But by then, there are not that many analysts covering these companies and providing their assumptions. If we look at the business segments, there are three. Financial services one, which of course is growing the fastest, but that's the smallest one at the moment. It's also the one that is unprofitable at the moment. Then we've got mobility revenue that has grown at a compound annual growth rate of 24.8%. And then deliveries, that's the largest chunk here, the orange bars here, that has grown at a compound annual growth rate of 18.6% since the March quarter in 2023. And here you can see mobility is their most profitable part of the business. Then we've got deliveries, and financial services is tracking to become positive, break even, let's call it. If you missed last quarter's earnings report, this is basically it. You've got the operating metrics on top, then the financial measures at the bottom. On-demand GMV up 15% year over year, or 18 on a constant currency basis. Group MTU is monthly transacting users, is now closer to 42 million. That's up 16% year over year. On-demand MTU, that's also in the millions of users, that's increased 19% year over year. If you look at revenue increased 17% or 20% on a constant currency basis. Operating loss did improve 59% year over year. They did say the following: third quarter 2024 was a strong quarter for us as investment made across the business drove an acceleration of our on-demand GMV growth. We are serving more users than ever before, with 42 monthly transacting users on the platform. We remain bullish on the long-term growth outlook of Southeast Asia and are firing on all cylinders to capture the strong user demand trends, improve income opportunities for ecosystem partners, and drive tech-led innovation to enhance the efficiency of our marketplace. We delivered our 11th consecutive quarter of adjusted EBITDA improvement and our second positive profit for the quarter, and the highest quarterly adjusted free cash flow to date for the business, which you can see right here. With the strong momentum we are seeing across the business heading into the end of the year, we expect to deliver sequential on-demand GMV growth in the fourth quarter and are raising our full year 2024 group revenue and group adjusted EBITDA outlook, which you can see right here. 2024 revenue to grow 17 to 18%, which was previously only 14 to 17% growth year over year. Group adjusted EBITDA $308 to $313 million, which is higher than the previous expected number of $250 to $270 million. And then adjusted free cash flow remains unchanged. They expect it to be positive for the full year. Now, why was the stock up 11% a couple of days ago? Well, this thing came out. Grab weighs takeover of rival GoTo at $7 billion valuation. Southeast Asia ride-hailing firm pushed for deal once more because apparently in 2024 there were already some rumors that Grab wants to acquire that company. So Grab Holdings is weighing a takeover of rival GoTo Group at a valuation of more than $7 billion, accelerating talks for a combination to end years of losses of Southeast Asia's competitive internet market. One scenario being discussed is an all-stock purchase valuing shares of Indonesia's GoTo at more than 100 rupiah apiece, according to people familiar with this situation. That would represent a premium of about 20% over its current stock price level. Now, why does it make sense? Well, if you look at the stock price for GoTo, since they went public, it's down over 77%. Now, why did the stock go back down on Wednesday? Well, apparently GoTo denies merger talks with Grab for the second time. So the Indonesian tech giant GoTo Gojek Tokopedia, by the way, Tokopedia, that part, I believe the majority has been sold to TikTok Shop. They still own a little bit, but I believe TikTok Shop took the majority of that, if I'm not mistaken. Correct me if I'm wrong in the comment section below. Yes, they also do e-commerce, which is why it does make sense for that to merge. There are some synergies in the financial space, in the delivery, mobility, and all of that. There are some synergies for sure. And then you can enter the e-commerce space as well and really become that giant in Southeast Asia. It makes sense. It makes sense. And probably that's one of the reasons why the stock went up so much. So anyways, GoTo has dismissed rumors of a potential merger with Singapore-based Grab Holdings. The speculation, which has surfaced repeatedly in recent years, remains unfounded, the company clarified on Wednesday. There is no agreement between the company and any party, including Grab, to engage in a merger transaction, as reported in the media. Now, again, if you look at the stock price, if another company comes in, puts in an offer, and offers you to buy the company at a 20% premium, I mean, it does put some pressure on management, especially since, well, the employees probably have shares. And, well, after this performance, horrible performance, it does put some pressure on maybe forcing them to sell the company. Maybe that's why the news got leaked. Who knows? I mean, there are various reasons why these things get leaked, probably to put some pressure on, well, management, the board, and saying, look, maybe it's time to sell. But right now, apparently that's not going to happen. But usually when there is smoke, there is fire. And since this is not the first time that we're hearing about these rumors, I mean, if you wanted to buy Grab before and you said, oh, it's above $5 already, maybe I missed the boat. Well, maybe right now might be your second or third chance. We've also had a JP Morgan note come out. They downgraded to neutral from overweight. They maintained a price target of $5.60, which of course is $1 higher than where we are at right now. The key rationale here is that stock was up 52%. It's written here year to date, but it's basically for the whole of 2024, pricing in strong earnings growth. Buy-side expectations has risen. Conservative fiscal year 25 guidance could weigh on sentiment. M&A speculation has fueled optimism, but synergies may not materialize. Well, apparently that's not going to happen, so that doesn't make sense. The stock reaction, stock was up 13%, stock is now down over 10%, so all of those gains are gone. So again, this here doesn't make any sense right now. Valuation concern, 2025 EV/EBITDA of 34 times, seen as relatively expensive. Again, now with the stock being down 10%, it's a bit less than that. Plus, I mean, they say all of these things, but they still maintain the price target of $5.60, which again is $1 higher than where we're at right now. The analyst sentiment here is still bullish on long-term market leadership and earnings growth, waiting for better entry points before turning more constructive. I guess the drop on Wednesday is a better entry point than the pop on Tuesday. So there you have it. Now, switching to a more macro view, right? It's a big player in Southeast Asia, so let's look at GDP. GDP for all of these countries combined, so Brunei, Cambodia, Indonesia, Vietnam, Thailand, Singapore, etc., in 2024, just short of $4 trillion. And that's expected to be at $5.5 trillion by 2029. So quite a rapid growth. And of course, if you are a big player there, if you want to create that super app, you are expected to grow with that. So huge opportunity there. I believe there are around 700 million people living in Southeast Asia. So yeah, the market is quite big. Looking at a couple of countries, looking at real GDP growth rate versus previous periods, there are here where we're looking at Indonesia, Malaysia, Philippines, Singapore, Thailand, and Vietnam. 3 of them have seen a quarter-over-quarter decline, and then the 3 others have seen an acceleration quarter-over-quarter. But as you can see, overall, they're growing quite rapidly. I mean, Singapore in 2023 barely grew 1.1%, but it does seem like 2024 is a year where they're growing much quicker than that. And of course, Grab being a player in most of those markets, this is definitely something you need to follow, especially if you want to open a position. This is all part of your thesis. Last thing here, ratios of working age to total population from 1950 to 2100. Now, as you can see, again, countries in Southeast Asia, as you can see, we are now in a period 2020 all the way to 2040 where the participation is probably going to peak in all of those countries. Some countries have already peaked, some others will peak a bit later. So yeah, you have to think about that for sure. But then again, in the future, there's going to be quite a lot of automation and all of that. So remains to be seen what happens. But yeah, it's a population, it's a geographic that is expected to grow quite quickly. And if you can invest in a company that is creating that super app, right? Food deliveries, and maybe even e-commerce, mobility, financial services, and all of that, I think picking the winner or the best player should put you in a very, very good position. This is a company worth 18 point something billion at the moment, a market that are playing in 700 million people. Of course, the average revenue per user is not as big as if you were a big player in the United States or in Europe, right? Because they make less money. But still, I think this company, as I've said in previous videos, I think this company could be $100 billion in the future. The future is not 2026 or 27. The long-term future, I think that's definitely possible. And so looking at the stock right now, if we go all the way back to 2022, we can see that the stock started to make higher lows. And then at the end of, towards the end of 2024, the stock went from $3 all the way to $5, close to $6. Does seem like this was a period where the stock was overbought, and then we retraced under the 50 and the 20-day moving average. Let's see what happens. We tried to go over that, but of course that didn't hold because of those merger talks that weren't true. We'll see in a couple of weeks and months if anything happens. The 200-day moving average sits closer to $4 at $4.11. It's an interesting one. I currently do not have a position. Very close to buy, very close to buying it because, I've been following the company for a while. I've used it actually 10 years ago in Thailand, so I've known about it for a long time. Didn't know it was public, but yeah, it's an interesting pick. It's an interesting pick for sure. And if I'll buy it, you'll probably know it in the portfolio video that I release on every Sunday. So all in all, that's about it. Let me know what you think about this company and this stock in the comment section below. Have you bought it, sold, traded? Let me know down in the comment section below. Like, subscribe, all of that. And I'll see you all in the next one. Bye-bye.